All right, good morning. Welcome back here to Trader Renee. Great to have you aboard. Market just continues to chop away here, and one of those periods where there's just absolutely no trend. We have seen this type of period for quite a while, and it has been a period right now, at least in the last 3 weeks, where the chop is with much greater magnitude than what the chop was a month ago. But if we back out S&P futures here, and I'm going to come to a 1 hour chart, and it was back here. We had the Fed, and the market recovered, and then U.S. President Trump came out and tweeted, and the market, went and fell sharply. You'll notice that since then, we're now 3 weeks removed. The market hasn't broken the low, hasn't broken the high. It has just come in and sat. Now, it's one where if we come in and put on some Fibonacci retracements here, let me come in and grab those. Let's see. Yeah. There we go. Okay. You'll notice that where the market sits right now is right at that kind of 38% retracement. We've seen it go as high as the 62% retracement, but this is where the range has kind of come in, and we see it chopping through this, what is it, 40, 60, 80 point range, and it's chopping through that range in a matter of in some cases hours, but a lot of the moves have been kind of overnight, or in the case here last Wednesday, or 2 Wednesdays ago, there was news, in the case last week on Friday, a tweet. So it's one where the chop is heavy, the range is heavy, but there's no trend in this range, right? There's zero trend formation in this range. Now, this isn't unusual. It's not something we haven't seen. In fact, we saw it all last month. The only difference between right now and last month is the range of chop. Last month, the range of chop was pretty tight, right? This month, the range of chop is pretty wide, but both are the same. None of them are trends when it comes down to it, and so it's just one where I don't expect to see a lot of signals come in for the challenge. I thought yesterday we might see some whirlpool, but we didn't. And so I'll sit in cash, and just goes back to the challenge philosophy here of surviving the chop, thriving in the trend, and we've had a micro trend here in May and a burst of trend here in June that we capitalized on, and since then it has been chop city, and now for well over 2 months. And will it break? Will the chop break? Yeah, eventually it will, and it'll trend. And when we start to see signals, I will definitely go after them aggressively, and looking forward, very much forward to that. But in the meantime, there's not a lot to really sink my teeth into. UPS has a 3-7 crossover to the upside here today. You can see this thing has had crossover after crossover. It crosses the upside, crosses the downside, crosses the upside, but really not going anywhere. Just a bunch of chop here with it, and that's just what we have seen all week with any of the crossovers, right? We saw it yesterday. Whirlpool had a 3-7 downside crossover, right? And okay, stock's chopping up here today. It is just that environment right here and right now for the market. Micron, which we were forced out of last week as it broke down a little bit here. Interesting spot for it, and interesting reversal spot for it. I'm not going to get a challenge signal here today, but if you're bullish and you say, man, where can I take advantage of possible upside here? Micron's sitting and reversing right off of its 50-day moving average here. Now, if you look at Micron and the 50-day moving average, there has been plenty of action, and the 50-day moving average is the blue line, right? There's been plenty of action off the 50-day moving average, both as support and resistance over the course of the last year. And so to see it come in as a little bit of support here, to see another chop up on Micron, I wouldn't be too surprised to see that, but I would not be too loose with a stop if it were to start to go the other way. But, we have some stocks that are starting to come down to interesting levels, like Micron, but just nothing really with with a trend component that is, really high. Even something like a Chipotle Mexican Grill, it had two nice days, and now today, but this has probably been one of the best trends, but it's also not a trend that the algorithm has been able to ride, as lack of signal. Then we had earnings, and you can see the trend is so slow here that we'd be stopped out on the time stop before any significant move. So same conditions, same things going on. Not a lot of news here last night. We did see some news on Brexit. And this is a part, we talked about the elements of a potential wall of worry, and some of the elements that are maybe not fully priced in yet. One of the elements I talked about was Brexit. And you can see S&P futures last night, this is a 1-minute chart, they were pretty flat during the Asian session. In fact, Asian stocks were pretty quiet. But you can see the chop as Europe starts to open, and then we get the sell in S&P futures during the European market here. And this came as Johnson there in Britain trying to suspend Parliament. We saw the pound, fall, and it just brings up those Brexit fears, the hard Brexit in October, that basically Great Britain leaves the EU without any sort of deal in place, which has been a big fear of, it has been a big fear from time to time over the last, 4 years? It's been a long process here with it, but, market has become semi-immune to it here of late over the last, 2 years. But we could see it really kind of come to a head if there is that kind of hard Brexit element out there that just catches investors off guard. Brexit, hard Brexit, it's economic growth fears, right? So it's going to impact earnings for companies. Ultimately, in the long run, is it a negative? Probably not. But, it will get a knee-jerk reaction out of equities here. Okay. Last stock here, I'll show you Disney. This one has the potential to trigger here today. This has been a stock that since the earnings, it needs some time. It just needs some time to chill out, relax, consolidate, decompress here a little bit. And it's had that. Right, it's had some of that time. It's very similar to kind of what we saw right back here in May, where just needed time to relax, and then we got the crossover right back here. We were able to trade it nicely. And, it's been in this kind of just relaxed state right now. We do have a 3-7 crossover happening. Consolidation risk element on it is still very high this morning, so it's not an entry. But this is one where, on the bullish side, you could argue that it's getting fairly close. Now, I don't have KB Home or Lennar on the challenge watch list, but KB Home, we talked about these after the last earnings for these companies, and KB Home was such a better earnings than a Lennar, right? And I'm not a huge fan of either stock right now. I think both stocks' path of least resistance fundamentally is lower, but they've had some interesting pullbacks on these upward channels. And if you're looking at, hey, you want to buy a pullback on a stock in an upward channel, Lennar, very interesting. KB Home, very interesting in those regards. You look at Home Depot, who had a very nice earnings move, big volume, has had a nice little consolidation. Is this a stock that can move up another 10% here? But this sector, this industry, Lowe's with a nice bullish engulfing. There's still some risk factors here associated with it. But, if you're looking on the bullish front, that Disney, some of the home builders, Home Depot, Lowe's, they have significantly better charts than, things like a Halliburton, which you could go get into and play for, the next chop up. But when you're looking at just much more high quality, high probability charts, those home builders, the Home Depot, Lowe's, whatever you want to call them, home builder suppliers, they're definitely in a nicer chart position than many of the other stocks that are out there, including something like a Caterpillar, which is finally having a little reversal in it here today. This morning opened up weak, has seen a little bit, but just with the market. We haven't seen Caterpillar, trade up and outperform the market on any sort of uptick here yet. And if and when it does, that'll probably be the time for Caterpillar to, take its next leg higher. But so far, we just have not seen it. So, the theme remains chop. And, that hasn't gone away. Going into the end of the month here this week, into a 3-day weekend for the markets, barring any sort of massive news, I suspect it's going to be chop until we get, that news, or until we get into or get beyond the Labor Day weekend. Thanks for hopping on. Have yourselves a fantastic day. I'll be back on here with you this afternoon, and we'll talk to you then. Take care.